You ready? Yeah, you got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them out.
Hi everyone, and welcome to today's currency call presented by Forex Trading Asia. It is Wednesday, the 9th of March, 2022, and a big welcome to everyone from the LCMS Traders Club that is watching the call live. And if you are watching this on YouTube a few hours later after the delayed release, make sure that you do subscribe to the LCMS Traders Club via the Jindal Thai website. And also, I hope everyone did get a chance to catch up on the evening call from last night. If you did make it, I hope it was informative. There is a little bit to go through today. It is Wednesday, so we've got the pound in focus with Jin, including the euro pound as well. And we've got Gimme back going through the ECB, the monetary policy meeting, as well as the interest rate decision and the statement that's coming out tomorrow night. So we are preparing for that, and Kim Hong will be going through what is expected and how to prepare best for that. And I'll be going through the DXY and also what's happening with the equity markets this morning too. But before we get into all the details, I will just share the risk disclaimer as well. And any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. We are happy to answer any questions that you may have during the call in the chat here in the Zoom call, or later on today, we will be available in the trading chat floor as well. But before I go into the DXY, we've got Kim Hong here just going through the ECB policy statement coming up tomorrow. And I will hand it over to you now, Gimme.
All right, thank you, Scott. Okay, interesting. The ECB, European Central Bank, will be meeting tomorrow, okay? And the monetary policy decision announcement will be made at 20:45 GMT plus 8, okay? So let's just do a quick recap of what actually went down during the previous meeting, okay? So during the previous meeting in February, monetary policy was kept unchanged, okay? Interest rate definitely remained unchanged, okay? Then pretty much it, okay? It's not much of a monetary, there's not much of a monetary policy changes. It's more like the forward guidance, okay, that was, I would say, provided, okay, last month, okay, that actually causes the euro to be more, I would say, hopeful, okay, more strengthening, all right? So basically, I think there was some, during the press conference, okay, while answering some of the journalists' questions, okay, Lagarde, okay, specifically did not repeat her, her confirmation that an interest rate hike in 2022 by the ECB is very unlikely. Okay, so I think prior to the February's meeting, okay, for like I think a couple of meetings before the February's one, Lagarde has been reiterating that an interest rate hike in 2022 is very unlikely. Okay, but then the thing is, this time round, or last time round, okay, she did not say that. Okay, so the market actually took it as a, I would say, a positive sentiment. Okay, a hawkish tone, a hidden hawkish tone coming in from the ECB. Okay, and of course with the ever rising inflation and things like that, that the market is actually thinking that the rise in inflation may actually lead to the ECB among themselves, okay, actually planning for or rather should I say putting a rate hike in 2022 back on the table, okay, which is why Lagarde did not go to the I would say more aggressive extent of condemning a rate hike in 2022. Okay, and then another point being highlighted last month, okay, was that Lagarde highlighted that the March meeting, which is this meeting, tomorrow's meeting, okay, will be crucial, okay, with the new set release of economic projections, because the quarterly economic projections that will be released tomorrow, okay, because that will justify any policy move such as increased pace of winding down bond purchases and things like that, and of course perhaps a possible increase in interest rate in 2022, okay, which is why tomorrow's meeting is, I would say, is important, okay. So as important as it is, okay, no change in monetary policy is expected. All right, interest rate will definitely remain unchanged tomorrow, okay. And as we all already know, okay, the pandemic emergency purchase program, okay, will be bonds purchases under this PEPP program will be ending by the end of March this month, okay. And then after which the bonds buying under the SS purchase program will be increased, okay, for the second quarter, which is April, May, and June, okay, for the months of April, May, and June, will be increased from the current pace of 20 billion euros per month to 40 billion euros per month, okay. Well, this is actually to facilitate the whole ending of bond purchases under PEPP, okay. This is actually to avoid any knee-jerk reaction, okay, once the ECB stopped purchasing bonds under the PEPP, okay. And then, you guys know that after the second quarter, okay, the ECB will be, well, that was the previous plan, okay, will be reducing, okay, bonds purchases from 40 to 30, and then from the fourth quarter of 2022 onwards, from 30 further down to 20, right? Now, that was the initial plan, okay? Now, all these plans were made prior to the whole Russian-Ukraine geopolitical tension, okay? But my take is this time now, they may actually revise this whole plan, okay? So specifically from third quarter onwards, okay, so the increase of bonds buying under APP will still likely continue, okay, from 20 to 40, all right? Well, like I've said, is actually to prevent any knee-jerk reaction upon the ending of bond buying under PEPP, okay? But the slowing down, okay, from the third quarter onwards may be revised, okay? So previously, they actually do it in a quarterly basis, okay? Third quarter and then fourth quarter onwards and things like that. Now, this time around, my take is that they will actually change it to a monthly basis, okay? Monthly basis, that's the first thing. Then second thing, okay, the previous plan was to reduce from 40 to 30, okay, which is a 10 billion euro reduction in bonds buying for the third quarter, okay. Instead of carrying a one lump sum of 10, okay, for 3 months, okay, the ECB may actually reduce down bonds buying by anything lesser than 10, okay. It may be 5, it may be 2, it may be 4, okay. So two things, okay. First thing, instead of on a quarterly basis, they may change it to a monthly basis, okay. Second thing, instead of a lump sum of 10 billion euros, okay, of reduction of bond buying, they may actually cut down to something lower than 10, maybe 5, maybe 4, okay. So these 2 points, okay, these 2 changes, when put together, okay, will give the European Central Bank more flexibility, okay. So instead of revising QE purchases on a quarterly basis, okay, every 3 months, the ECB now gets the flexibility of reducing it on a monthly basis, okay, or making changes. I wouldn't say reducing, I would say make changes to it, okay, on a monthly basis. And then instead of doing it one lump sum, they carry at bite size, that will definitely provide them the maximum flexibility. Maybe next month they would want to decrease by maybe by 5, and then during the meeting for next month, okay, they may actually decide for the following month to have no no tapering. All right, so that's the kind of flexibility that ECB can get if they were to adopt this new changes, these changes, this couple of changes, okay, that I've just mentioned. So why do they want to do that, right? Like I've said, it's because of the Russia-Ukraine geopolitical tension. Okay, so right now, I believe the Eurozone is not the only one, it's not the only economy, okay, but many other economies, major economies around the world are also facing this issue of stagflation. So what is stagflation? Okay, stagflation is basically inflation is still increasing. At the same time, the economic growth has stagnated, okay, hence the term stagflation. Okay, stagnation in the economic growth while inflation continues to rise. Okay, prior to this whole geopolitical tension, okay, we have seen that major economies continue to recover, okay, and inflation continues to run hot, okay, which prompted the major central banks to actually, taper at a faster rate, or if not, end quantitative easing at one go, okay, so that they can have the flexibility of increasing rates, in the near term, in the next few meetings. And we have already seen, major central banks, some of the major central banks started increasing interest rates already. Okay, so that was previously. Okay, stagflation wasn't much of an issue. Okay, economy was bouncing back from the whole pandemic and things like that. Omicron doesn't really seem to have that much of an impact, negative impact on the economic recovery. Well, because mainly COVID restrictions weren't really imposed that extensively as back in the Delta days or back in the Alpha days. Okay, so it all was good. All right, all was good until this war started. Okay, and then of course inflation will continue, is expected to continue rising. Okay, because of the crazy strong rise in oil prices. Okay, right now oil prices are really trading comfortably above $120 per barrel. I think this morning I was just checking oil prices. UK Brent crude was trading at around $130 per barrel. Okay, the US WTI crude, okay, was trading above $120 per barrel. Okay, so that will definitely create an upwards pressure in inflation, okay, with the rise in oil prices. So because of all this whole stagflation, it's kind of hard for the ECB to actually continue with this whole aggressive, I wouldn't say aggressive, but with this previous plan of ending PPP and then increasing APP, and then on a quarterly basis confidently reducing the bonds buying until the end of the year, and eventually, hopefully, okay, they may actually end bond buying under APP and then lead to a rate hike. And as such, that would be very good, right? That would be hawkish. There will be a hawkish tone coming in from the ECB. Okay, so right now this whole stagflation issue is really an obstacle between monetary policy tightening and the European Central Bank. Okay, so because of that, they will want to take things one step at a time. Like how the RBA approached monetary policy late last year. Okay, they taper by a bit, and then they wait for a few months, and then they observe, and then they reevaluate, okay, before deciding if they should actually carry on more tapering. Okay, so this is what the ECB will likely be adopting this time around. Okay, and in order to do that, they will have to make amendments to how they are going to taper bond buying under the assets purchase program, APP. Okay, so we will definitely have to pay attention during the press conference to whether, okay, Lagarde's tone on rate hike has changed. Okay, so yeah, like I said, back in the February's meeting, she did not, specifically condemn, okay, interest rate hike in 2022. All right, but this time around, if it's for sure that Lagarde will, highlight the whole high level of uncertainty caused by this war between Russia and Ukraine. Okay, but if because of this war, Lagarde were to mention anything like a rate hike in 2022 is definitely unlikely, highly unlikely, and things like that, because we don't know how the war will develop and things like that. Then that will that will be considered a dovish tone, okay? And we are likely going to see a weakening in the euro, all right? And of course, if the ECB is going to react strongly towards the war, okay, specifically, like what I mentioned just now, by adopting a more defensive approach towards QE tapering, all right, then that may, okay, very well be putting further downwards pressure on the euro, okay? So we may very well be seeing a weakening in the euro, although for the past few days and since last week, euro has already been weakening, okay? So of course, there's a possible, priced in phenomena happening already, all right? And then tomorrow, the weakening of the euro as a result of dovish tones coming out from the ECB may not be as strong as expected. Okay, and also keep in mind that the quarterly economic projections material will be released tomorrow as well. It's March. Okay, so a new set of quarterly projections, economic projections will be released this time around. Okay, we can definitely expect inflation projection to be revised upwards. Okay, that's for sure. All right. And then for the other economic indicators, we'll have to see how it goes. Although, yeah, like I said, stagflation may actually be a big issue for the ECB. Okay, so any questions right now? Look like there is always a good emergency for which they need a good bond purchase program. Yeah, I mean, like the PEPP was actually introduced, okay, as a result of the whole pandemic and things like that. I don't think they're going to come up with a new bond buying program this time around in response to the Russian-Ukraine war. Okay, if they were to do that, that is going to be terrible for the euro. Okay, I mean, I know that European countries are actually buying energy oil from Russia directly and things like that, but I don't think this is going to be that bad, that negative to the point whereby the ECB has to create a new package just to support the economy. I mean, after all, the Eurozone economy is not that in need of aid from the central bank as the previous years, okay, due to the pandemic, right? So right now it's pretty much like an external factor that is impacting the Eurozone economy, but it's not as bad as when the pandemic hits. All right. So we probably won't be seeing a new package being released, and we will definitely be seeing the PEPP ending soon. Okay, by the end of this month. Okay. Okay. So if there's no questions at the moment, well, as usual, feel free to put your questions in the EcoFin chat. But personally, I feel that there's going to be trading opportunities tomorrow. I will be around as well. Okay, just to break it down. Any updates on the monetary policy position from the ECB, and then to see if we can get any trading opportunities tomorrow evening. All right, and the press conference will be held at 21:30 GMT plus 8. Okay, I'll be providing the link, the live stream link for the press conference for those of you who are interested in hopping on with me, okay, to the press conference as well. Okay, and I'll see you guys tomorrow. Okay, with that, I will hand it over to Scott for his analysis on the DXY. Over to you, Scotty.
Thanks, Kimmy. And just remember, for the people that did come in a little later, if they missed the preview of the ECB monetary policy decision, make sure that you do catch the replay that we do share in the LCMS trading floor chat as well. So US dollar index, and we're still hovering around 99. So we did have on the daily chart here, you can see we did have there was an attempt for a break of the recent highs at 99.40. We did pull back and we did close a little lower, still above 99 though. And we're well and truly above that 98.23 support level. And the low of yesterday was 98.72, and I was still not super keen to get in. I'm still going to sort of be more of an observer. We do have, like was mentioned, the inflation data that is coming out tomorrow for the US. So that is something to stand by on. Logically, you would think that it would help move the dollar higher. So we might see tonight that there is some further easing in the US dollar, but it's been one of these sessions, well, this week, and sessions in the US have been quite interesting, where there's a lot still ongoing with especially oil out of Russia. And Joe Biden was talking last night or early this morning, our time this morning, on the oil sanctions and also banning US from purchasing Russian oil. So that's really a lot of attention is to gold and also to oil. So US dollar is just sort of holding steady, but still quite elevated. And I'll just go to the news from yesterday. Just a quick recap. There wasn't a lot of high impact news. To be honest, I was looking at this. The economic optimism was down a little, down to 41, expected 45.7. But the main event was from yesterday was the President Biden speaking, and really was very focused on how they want to really pressure Russia some more to start reversing the invasion and really pushing Russia to start getting just out of Ukraine, or even stopping and looking to negotiate, because there's still pretty much a stalemate we've seen, and that is making trading a little bit challenging as well from a perspective of where the risk sentiment is. So be cautious still for today. We just had the JOLTS job openings expected to be slightly higher than the previous read at 10.96 million. And then just going into Thursday, so for tomorrow, and that's just after the evening call from 8 o'clock to 9 o'clock. So nice amount of preparation there for trading the event. We could see some anticipation and some buying up before there. So we've got, a good amount of time from now to that, where we could see a bit of an easing down on the DXY, and then some buying into what is expected to be elevated. I mean, we're expecting month on month for the core CPI at 0.5. and then CPI month on month at 0.8. So with rising fuel prices, gas prices, there's a lot going on, especially in the US, where we could well see elevated numbers here month on month and year on year as well. So pay attention to that. Now, one more thing I'd like just to go into detail is we are seeing, this is the 2-year bond yield. So recent highs have been 1.64, and we have eased down a little bit, but like we've seen recently, this is the past few days, the dips are being bought into. If we go to the 3-month to give a little bit more context, that the 1.6 has held up as high, but we have seen it get over 1.6. And if we go to the yearly, we can see it's creeping back now. And the 5-year will show us where it was back when we had interest rates rising. And we are creeping up to that 1.8. So it's just a steady climb now on the US 2-year bond yield. So the higher the 2-year here just suggests that markets are really saying, yes, interest rates are going to definitely have to come up, even though there's been chatter about maybe not as aggressive rate hiking, but it's just inevitable that it's a real mess just with the inflation, Ukraine, Russia, that increases oil prices. So, it's hard to say US dollar is really going to start cooling down anytime soon. Now, just finally as well, a quick review of what's happening with the Aussie session this morning from a stock market point of view, ASX 200, and it's been trying. This is the daily chart. So we hit 7,000 and a breach below it, and we are still seeing a bit of support. So markets, they did see, there was a comment made by President Zelensky from Ukraine about the NATO membership could be something that they would put off and, eventually maybe not even think about it if that helped with negotiations. So that came out this morning, and that seemed to help markets from a risk-sensitive standpoint. But other than that, US dollar pullbacks into 98.50 ideally. 98.70 was recent lows, but I'm just being a little conservative and waiting for at least a test of 98.70. And those are my thoughts there on markets. Now we do have the pound in focus now with Jin, so I'll pass it over to you now, Jin.
Thanks for that, Scotty. So, what the guys have been sharing, it's really back down to there's a lot of unknowns at this point. We have the ECB to be released tomorrow. There might be a ceasefire, there might be NATO holding back on Ukraine, or Ukraine holding back on NATO membership there. A lot of unknowns. Main thing for the trades will be to approach it with a lot of patience, all right? Patience is the key word here. Why I say that is because looking at the pound dollar in focus today, Forex Factory looking at the news, no pound news for today. And you also notice that for tomorrow, Thursday, not much happening there. We do have the US CPI numbers, which the guys have spoken about. On Friday, we do have some pound news, but not big price movers. The main thing to pay attention to will be the GDP number there for the UK, looking to go from month on month from a minus 0.2% to a 0.1%. So looking like a brief upward move in the pound on the GDP for the pound dollar there. And then following on from that, not much else. All the way through to next week, what you also notice is that not a lot of big news to be released. We do have the claimant count numbers for the UK, the employment numbers or the unemployment numbers there, looking like it's probably recovering a little bit, still not the best at this point, but unemployment rate from a 4.1 has been dropping since a 4.2. So I think that we might see some stability returning back to the economic data for the UK. And then all the way through the week, you'll see next week, not a lot of news again. So what all this means is, putting it all together there, is for the pound dollar, as we were sharing with the Traders Club members last night during the live session, the pound dollar, if I move this line just slightly to this 1.31 level, it has been sitting in that consolidation since Monday, the 7th of March. It's been sitting there struggling to break lower or to bounce much higher. It seems like it has found that level as a good support, and with that stability that, the not big changes coming from the UK, we might see it form that level and maybe even bounce towards the upside, towards that 1.32 level. I don't think we'll see a big tear upwards, a big move upwards, but a retracement, a bounce back up towards that 1.32 could be quite likely at that level there. I'll still be looking to sell it down. I still wouldn't be looking to move much higher. I wouldn't trade it up. I would say look for it to move towards that resistance and turn down. What could be lower? I'll move to the weekly time frame just to show you there. We have a lot of downside. 1.27, 1.28 was in September 2020, right? So putting in that line there, 1.28 will be September 2020. With that, what it means is back to the H4 time frame, I'm looking for it to test higher. Look for that selling opportunity towards the downside, either from that 1.32, or if it sits in consolidation and breaks lower than from this 1.31 support level. So two trade ideas here. One, either look for it to bounce back up and look to sell from this resistance level. You can keep your stop loss very tight at about 30 pips. Immediate take profit at about 60 pips, a 1:2 risk reward ratio towards the downside for the pound dollar. If it bounces up, test that resistance and turn down. If not, then looking for it to break significantly. I'll be a bit more conservative here and look for it to break quite low, so below 1.307475. Look to sell at that point. Again, stop loss can be quite tight. Well, no, actually it'll be about 60 pips, But your take profit level, I wouldn't go all the way down to that 250. I would say the next level at 1.3 would be good. So a 1:1 risk reward ratio towards the downside for the pound dollar, either for it to bounce back up, turn down 1:2, or to break below this support 1:1 towards the downside. But you know that once it crosses past that point, there can be multiple trades all the way down towards the 1.28 major support level. With that on the pound dollar, looking at a possible retrace before turning back down, what it means is looking at the euro pound. We were sharing this last night on the H4 timeframe, looking for it to come up, test that resistance, which it did very briefly before turning back down. I think that we might still see that consolidation before a further move towards the upside to test that resistance again before turning back down. So these two trades, one that we shared last night, looking to sell below that 1.8, below that 0.8351 level for a 1:2, 1:2.5 risk reward ratio towards the downside, or if it were to just sit in consolidation and track lower, then look to sell below this 0.83 level, will be a bit more safe there, about 8.274. Again, a 1:2 risk reward ratio towards the recent low point. Your stop loss will be 30 pips, your take profit will be 60 pips. Multiple trade ideas here on the pound dollar and the euro pound. With that, back to you, Scotty.
Thanks for that, Jen. And just remember, guys, that there will be the call tomorrow night as well. So make sure you get onto that to be prepared for. Really, there's quite a lot of news coming out, Dan, for some potential trades as well. So hope everyone has been having a good week and making sure that you do keep the trade short term just with all the volatility, and stay cautious. Reach out to us if you've got any questions for the LCMS Trading Club members, and hope to see everyone on tomorrow's call. Thanks, guys, and bye for now.